and on this Monday, July 13, 2020, we bring you the market review that highlights the news between financial and capital markets as it relates to the economy. Let us give you a lineup of the stories and analysis we'll be looking at today. Review of market performance for previous week. SEC Nigeria collaborates with NIDA on data protection. Seplat Petroleum appoints new CFO. Suno Assurances PLC issues notice of board meeting. And FDC brings analysis on CBN's recent move to unify FX rates. And first, let's look at the previous week market performance and activities. Investors lost $15.52 billion. I repeat that again. Investors lost 15.52 billion naira last week as the Nigeria Stock Exchange All-Share Index dipped by minus 0.12% to close the week negative, while the equities market closed Friday last week on a positive note as NSE ASI appreciated by plus 0.12% to close at 24,206.36 basis points, as against minus 0.01% depreciation recorded previously. The NSE year-to-date returns currently stands at minus 9.45%. That's for the equities markets. For the NSE OTC Securities Exchange, it closed the week with a negative return in non-listed share index. The NSI return fell by minus 1.28% to close the week at 707.77 points, as against 716.96 points in the preceding week, that was July 3rd, 2020. In addition, week 28 saw NSE investors lose 6.75 billion naira in value. NSE OTC market capitalization closed at 519.90 billion naira compared to 526.65 billion naira in the preceding week, Friday, resulting from a negative movement of prices. There was, however, a 346.36% increase in the total value traded during the week, as week 28 saw NSE investors trade a total of 59 billion, that's 59.825 billion in value compared to 13.403 billion in the previous week. Total trade activity for the year is valued at 10 billion, that's 10.189. In the same pattern, the volumes traded during the week was 10.737 million units compared to 224,498 units in the previous week, leading to a 4,683.01% increase in trade volume compared to week 27. Total volume traded for the year is currently 7 billion units. Looking at the top traded securities by volume, the week closed with Food Concert PLC ranking top among the four most traded securities under the NSD by volume, and the VFD Group PLC as the fourth most traded stock by volume in week 28. In terms of securities, the week closed with Friesland Campina Wamco Nigeria PLC ranking top among the top four most traded securities by value, and Niger Delta Exploration and Production PLC stood as the fourth most traded security by value for the week. Looking at the advances, three of the NSE OTC stocks closed the week with a positive movement in prices of the stocks. Afriland Properties PLC, which currently holds a market capitalization of 2.94 billion naira, closed the week at 2.14 billion naira, at 2 naira 14 kobo, representing an 8.08% increase from the previous close of 1 naira 98 kobo. Food Concept PLC, which currently holds a market capitalization of 4.38 billion naira, closed the week at 75 kobo, representing a 7.14% increase from the previous close of 0.7 kobo. Friesland Campina Wamco Nigeria PLC, which currently holds a market capitalization of 118.14 billion naira, closed the week at 121 naira, representing a 0.12% increase from the previous close of 120 naira 86 kobo. For those that declined for the week, one of the NSD OTC big stocks closed in a negative movement in price. Central Securities Clearing System PLC, which currently holds a market cap of 67.5 billion naira, closed the week at 13.5 naira, that's 13.5 kobo, representing a minus 9.88% decrease from the previous close of 14 naira 98 kobo. That is what we had from the NSD markets. Looking at the fixed income, the FGN bonds, the calmness in the FGN bond space persisted for a second consecutive session with very slim volume passing through the benchmark curve. The short end of the curve opened and remained quiet, although there were few bids for the 2021s at 3.5% with no offer to match. At the tail of the curve, most of the market action kicked off and ended on the 2036 and the 2049s. However, more of the trades executed were on the 2049s, which settled around 10.91% level, losing 4 points from the previous week closing. The 2036, on the other hand, remained quoted and unmatched at 10.20% and 10.15% for most of the trading session. By and large, yields expanded slightly by 1 basis point for the end of last week. Zcrest, who gives us the updates from the fixed income market, expects trading activities to increase this new week, but on selected papers offered at the juicier level. Looking at the treasury bills for last week, the OMO bill space ended the week on a very frail note as the trading activities dwindled across the curve. A larger part of the trading session was dominated with much bears of the offers seen at the short end of the curve. However, by business close, the market witnessed a bullish run for the latest OMO issue, which was 8th of June, with the majority of its trade settling around 6.6% levels, while yields compressed by an average of 48 basis points across the curve. At National Treasury bill space, there were more retail offers with few bids to match, especially for the 27th August maturity, which was offered at 2%. This new week, activities are expected to increase, especially at the beginning of the week, albeit more bulls at the tightness in the system liquidity case. For the money markets, for last week, system liquidity remained slightly liquid, opening the day approximately 136.4 billion naira positive. Consequently, the OBB, that's the open buyback, and the overnight rate slide slightly, dropping by 10.6% on the average on both the OBB and OVN rates, closing the week at 13.80% and 14.10% respectively. For the new week, Zcrest expects to drop slightly at the beginning of the week, but inch-ups will come up by the end of the week as the market sorts to raise funds for the biweekly FX retail auction. Now to the Forex markets. For last week at the interbank markets, the Naira depreciated by 50 kobo at the import and export FX window as supply squeeze continued to affect the general flow of funds, which remains fairly low. Zcrest also sees a dip by approximately 2 kobo in the cash and transfer window as the market continued to react to the Apex Bank, Central Bank of Nigeria's converging rates, spots, and this SMI space, thus closing the week at 463 naira to $1 and 466 naira to $1 respectively. For Euro bonds for the last week, the Nigerian sovereign tickers weakened to close the week more bearish than bullish as the market saw a bit of profit taking across the benchmark curve, mostly on the mid and long tenure papers. Yields expanded by an average of 13 basis points across the sovereign papers. Looking at the sub-Saharan Africa space, most of the traded stocks or markets on a quiet note, although there were more offers on the Angola papers, but in small sizes. The Nigerian corporate tickers, the Fidelity Bank, the 2022s, and the United Bank of Africa 2022s were the most active of the tracked papers, moving at the opposite sides of the train as yields adjusted on both papers by 34 basis points and 40 basis points respectively. Now let's go on to our regulators as part of the activities to ensure that the market is deepened and more secured. The Securities and Exchange Commission restated its preparedness to collaborate with the National Information Technology Development Agency, that's NIDA. This collaboration, according to SEC, is designed to deepen data protection in the markets. And this is in a bid to continue to foster a safe conduct of transaction and usage of personal data in the Nigerian capital markets. Director General of SEC, Mr. Lamido Yugoda, stated this during a recent webinar on the Nigerian Data Protection Regulation and how it affects the capital markets. The event, which had as its theme Nigeria Data Protection Regulation, Implications on the Nigerian Capital Market, Regulators said that the Commission is very serious on the issue of data protection in the capital market, assuring that going forward, SEC will continue to create necessary awareness on this. According to him, he said, you may all recall that in 2019, the National Information Technology Development Agency issued the Nigeria Data Protection Regulation, NDPR, with the objectives to safeguard the rights of natural persons to data privacy, foster safe conduct for transactions involving the exchange of personal data, prevent manipulation of personal data, and ensure that Nigerian businesses remain competitive internationally. By this regulation, therefore, all private and public organizations that collect, process, store, archive, and destroy data of natural persons in Nigeria or of Nigerians resident abroad are required to comply with the provisions of the regulation. Speaking for, I said, since the Commission and indeed all capital market operators perform these activities on data as covered by NIDA and NDPR, we are also subject to the new regulation in one way or the other. That explains the reason behind the webinar that was organized to enlighten the capital market community on the provisions of the NDPR. The SEC board assured participants that the new management will make it a duty to interact with the market from time to time in a bid to develop the capital market and improve its contribution to the economy. He expressed the hope that the lessons gained from the session will impact the operations of the participants meaningfully and lead the capital markets to full compliance with NDPR. Giving the presentation, Mr. Lufemi Daniel, the lead NDPR desk for NIDA, assured of the readiness of NIDA to provide advisory support on NDPR implementation for the capital markets, adding that the agency will work in synergy with SEC to standardize compliance in the capital markets. Data protection is very important, and we know how key it is for market players in the market. Now, Seplat Petroleum Development Company, leading indigenous oil and gas company in Nigeria, made a very significant appointment over the weekend. Its chief finance officer, CFO. The board of directors, in compliance and following the regulations, announced the appointment of Mr. Emeka Onwuka as their new chief financial officer and also executive director of the company. He joined Seplat with effect from August 1st, 2020. Mr. Onwuka comes on board with over 3 decades experience in financial services within sub-Saharan Africa. He has acted as the voice and face of major financial institutions in Nigeria as former Group Managing Director and CEO of Diamond Bank PLC, former Chairman of the Enterprise Bank Limited. Mr. Onwuka is a partner at Anderson Tax Nigeria and holds various board positions as Chairman, FMDQ Securities Exchange Limited, Director, FMDQ Holdings Limited, Director, EcoBank Nigeria Limited, and Director, Bati Airtel Nigeria. So congratulations to Mr. Emeka Onwuka, and we hope that his experience will help to stabilize and take Seplat Petroleum Development Company to a greater level. Now let's get a notice from Sunu Assurances Nigeria PLC of its virtual meeting. Sunu Assurances is planning its board meeting, and this is scheduled to hold on Thursday, 30th of July 2020 at 12 noon. The virtual meeting is to consider and approve the second quarter 2020 unaudited financial statements, amongst others. In compliance with the rulebook of the Nigeria Stock Exchange, Sunu Assurances says there will be a closed period commencing from Monday, today, 13 July, until 24 hours after the release of the company's unaudited financial statements for the quarter ended 30th June 2020. This will be to the exchange and the general public. During the closed period, no director, person discharging managerial responsibilities, and advisors of the company and their connected persons shall deal in the securities of the company when the trading window is closed. That's from Sunu Assurances, and just shows you the trend, the increase in the utilization of the virtual platforms for meetings. The lockdown, the COVID-19 pandemic is not affecting it. People are leveraging the platforms to have their meetings. Let's go on to interesting insights from the financial derivatives company, talking about the recent move by the Central Bank of Nigeria to unify the FX rate. That's been a major discussion point across the country. And so according to FDC, so far in the second quarter, the average daily turnover at the import and export FX window has been $43.22 million compared to $245.1 million in the first quarter, which is indicative of the dearth of Forex. Different figures have been bandied about on the volume of the Forex demand backlog, irrespective of what the actual demand is. The fact still remains that there are shortages. Indeed, one would ask where the demand is emanating from, especially as schools are closed during this period, so international tuition to an extent has been put on hold, and international travel remains suspended. But what of the investors that are stuck with Naira cash and want to repatriate their funds? The antsy over whether the Naira is trading at its fair value or if the external reserves level is sufficient to meet the outstanding obligations has heightened uncertainty in the markets. The Central Bank of Nigeria announcement that the reserves level is comfortable to meet obligations should smooth many ruffled feathers. Also, now that there is more clarity on the CBN's exchange rate stance, it should boost investor confidence. However, a note of caution is brought here. There are standing obligations, and when nilled off puts the net external reserves level below $20 billion. And if we were to translate that, it means that we have only 5 months of import cover. We don't want to get there. But in addition, Nigeria still faces a serious problem with respect to its sources of Forex, which remains constrained. Oil prices will remain low, probably below $50 per barrel for the rest of 2020. Coupled with reduced oil production, Forex revenue from oil receipts will be limited. Another source of Forex, diaspora remittances, will decline sharply due to the rising rate of unemployment and contraction in the global economy. The Minister of Finance has said no Eurobond issue will be done this year. However, the drawdown on multilateral loans from the likes of the International Monetary Fund and the World Bank will provide or should provide some buffer. Let's look at the implications again as highlighted by the FDC. It talks about increased FAC funds as federal account allocation funds. State governments will benefit from an exchange rate unification around the NAFEX as they will be receiving more Naira. Interesting for states. This should offset the impact of reduced oil sales and tax revenue due to the contraction in the economy and business activities. Also, the fact that the government has stopped the payment of gasoline subsidies should ease the fiscal burden. Now, there's a big question about the Naira and what's going to happen to the Naira with this unification of FX move by the Central Bank of Nigeria. FDC is very strong on the fact that the Naira will not crash, and here are the assumptions. They have based on the projections, and they are as follows. Terms of trade decline of 6% is one area they're looking at. The external reserves cover, after discounting $5 billion backlog and $6 billion swaps, give a 6.5 months cover. A money supply mop-up of 4.78% is in the horizon. It looks at exchange rate liquidity mop-up of approximately 9.72%. There are thoughts that there's a possibility that there would be anywhere, the whole exchange rate would be anywhere between 400 to 420 Naira to a dollar. Fear, uncertainty, and speculation not factored in based on the above, the unification of the exchange rate is expected to lead to a depreciation of 9.72% of the official rate towards the INEFX rates. This will in turn mop up about 4.78% of liquidity, which is about 1.35 trillion Naira. So the total Naira liquidity reduction of 14.5% is expected to lead to an appreciation of the parallel market rates towards the range of 400 to 420 Naira. Interesting insights from FDC on the unification of the FX rates. That will continue to be a very, very important issue we'll be monitoring here on the market review and its impact on the Nigerian financial capital markets as it relates to the economy. Well, as you all know, we've continued to create this awareness to tell you that in this period of crisis and uncertainty, where the globe is even looking at the possibility of a second wave that will affect the global markets, and we are also grappling with the uncertainties in the crude oil price markets, economies are being affected. Business sustainability is high on demand in terms of strategy, and survival is also key. But in the midst of the survival, people are also taking advantage of people and trying to use them to achieve their own means and ends. It's a dangerous trend that during this period, platforms emerge promising you 100 to 200% returns. They're not registered or even regulated by the Securities and Exchange Commission. We once again appeal to all Nigerians, investors this period, to be wary of platforms that are out there to swindle you and make you lose your hard-earned money and savings. We've had a long history of this. Billions of naira have been lost to investments that are not registered or regulated. We don't want this whole occurrence to occur again. And that is why we appeal to you to continue to engage credible market players and the regulator, SEC, Nigerian Stock Exchange, FMD Security Exchange, the NSDOTC, and even the community level, the FX Exchange. For us in ProShare and Just Leading Financial Information Hub, we're always here to give you insights, create awareness, and empower you with the necessary information to make the wise investment decision. This period, we advise you to explore those channels and avoid anything and any trend, any platform that is not regulated or registered. Because when you put your money there and you lose it, it affects your life, your family, and even those who are maybe your dependents. This is what we'll continue to emphasize. Caution, knowledge, and total discernment. This is why this program is here for you, to give you insights on what is happening in the markets and why you need to avoid platforms and schemes like this. Please don't make that mistake. People have made those mistakes and have still not recovered 10 years from now, from when the last series of crises. The most recent one was 2-3 years ago, and people have still not recovered from the impact of all those Ponzi schemes and schemes that are regulated by the apex regulator, SEC Nigeria. The word they say is enough for the wise. And we hope you take note of this. That will be all for the market review. Join us throughout this week for reports, analysis, and exclusive interviews on Nigerian capital markets. Also, log on to our website, www.prochange.com, to get videos and, of course, read our reports and analysis. And, of course, we want you to know that we are here to always engage you. For research, analysis, and insights, you can join us. Send your mails to research@prochange.com for further inquiries and understanding about market activities and developments. Till we come your way again. We want to thank you very much for being part of the program. We want to wish you a lovely day, but most importantly, please stay safe.